creating a training session or winding down for the night, welcome. So on behalf of the entire WeMasterTrade team, we are truly pleased to have you here with us for this global live stream session. So my name is Aidan and I'll be guiding you through this exciting 2-hour journey as your host. So today's live stream is not just a presentation, but it's a conversation, and it's window into the engine room of one of the most fast-growing and forward-thinking firms in the industry. And of course, I am not here alone. I am joined by two remarkable guests who help shape what WeMasterTrade represent today: skilled traders, mentors, and role models within our community. So first, let me introduce the ever-composed, always insightful Onat. Welcome, Onat.
Thank you so much, Aidan. Hello everyone, and thanks for spending your time with us. I'm truly looking forward to today's session. There's so much to cover, not just about strategy or rules, but about the ecosystem that WeMasterTrade offer, from how you start, how you grow, to how you earn. This is the kind of platform that doesn't just fund trade, it's build trader.
So next to him is someone who brings chart analysis and clarity to every chart and conversation. She's strategic, she's sharp, and she's a real force in our trading today. Please welcome Helen.
Thank you, Aidan, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me more about today is we're going to unpack everything, not just about the WeMasterTrade offer, but how traders can truly take advantage of our system, from packages to promotion to scaling and long-term profit sharing. If you ever have questions and even doubt, today is the day to ask them.
And that's exactly what we're here for. If you're brand new to WeMasterTrade, already a part of our Funded Trader program, today's live stream is going to give you the full picture, not just the highlight reel. So over the course of this session, we're going to walk you through what WeMasterTrade truly is, what we believe in, and how our program are designed, and why we're doing things differently from traditional brokers or platforms. So I want to be clear, this isn't just about sales, this is about understanding. We want you to know what you're signing up for, what kind of structure support your journey, and how you can use that structure to not just succeed, but scale.
And speaking of the structure, we'll begin by sharing the story behind WeMasterTrade, how we were formed as a funding project, not broker, with a very important distinction. Unlike broker who profit from volumes or loss, our WeMasterTrade is built the belief that your success is our success. We invest capital in traders, cover the risk for them, and share profit only you will do well. That's the foundation.
Exactly, and from that philosophy flow everything we offer, especially our trading packages, which will be discussed in detail with a plan to logic behind each one. That kind of trader can ever look at our package and prove which one is right for me. Today we will answer that.
And more than that, we'll also do a live comparison between packages. We'll break down pricing, account size, maximum drawdowns, consistency rules, and even payout side by side to help you make a fully informed decision. So it's one thing to see number on a website, but it's another thing to understand the intention behind them.
Oh, right. And so when you understand the packages, the next question is always, how do I stay confident while trading? And we'll move naturally into discussing trading rule, which honestly is one of the most important parts of today's session. We will explain what the daily loss limit is, how it's calculated, why it includes both low and floating profits and loss, and how to avoid violating it, especially overnight. We will go into the maximum total loss, the consistency ratio, and we will even address command mid understanding about trade sizing and risk per trade policy.
And we want to explain rules in isolation, where we blend them in the context of live trading decision. Well, I share some personal examples of mistakes I make when I first start trading under funded conditions. And how I adjusted, because rules aren't meant to restrict you, they dare to protect you, the integrity of your growth.
And while we're on the topic of having you succeed, we'll be guiding you through our current promotion plan, including a limited time discount codes, further support campaigns, bonus capital opportunities, and how to properly qualify and submit proof. So we've had some amazing responses to our promotions, but also some confusion. So we'll be showing you exactly what to do step by step.
And from there, we will transition into a discussion on our scale plans, which I personally think is one of the more underrated part of WeMasterTrade offering. Many people don't realize this, but we have a structured growth pathway in place. If you perform well consistently, you don't just get payout, you actually unlock higher capital tier. It's not just about getting funded one, it's about involvement into the six-figure funded trader.
And speak of growth, one of the most powerful ways to build long-term income at WeMasterTrade is through our profit sharing model. This is the heart of what makes us different from when you trade on funded account and generate profit without breaking rule. We share that profit with you up to 90%, but there's more to it than just the percentage. Well, it plans the full payout cycle, result, and timeline today.
Now, I know many of you watching today's on Just Traders, you're also advocates, influencers of people that launch network. So that's why we're also taking time to explain our affiliate program, and we'll do it transparently. We'll walk you through how commissions are calculated, how affiliate referrals are tracked, and more importantly, what you need to qualify for payout, including a detailed explanation of the two referral rules and minimum funding conditions.
And this is especially important because we want all our partners to feel confident and clear about their earnings. We have seen a huge growth in affiliate activity recently, and we want to ensure everyone is promoting rapidly, understanding the term, and building long-term income stream.
So as you can tell, this is not just a service level LiveStream. We're diving into everything: packages, rules, promos, scale up paths, profit sharing, and affiliate opportunity, all with one purpose in mind: helping you make the most informed, empowered, and confident decision possible.
And we want it to be interactive, not just informative. So if you have any question at any point, please drop it in the chat. Our moderators are watching, and we will answer as many questions live as we can. Your voice matters.
And if you're watching this on replay, don't worry, we will leave timestamp and summarize below, and you can always reach out to our team with any follow-up inquiry. Our support team is incredible, and they really care about helping traders succeed.
So to wrap up this welcome, I'd like to say this: WeMasterTrade is not just a platform, but it's a commitment to build road traders, to create fair structures and scalable pathways for people around the world who are serious about trading as a profession, not a game. So if you're here to grow, to understand, and to take action, you're exactly where you need to be. So let's dive into the journey together. And let's begin once again. Welcome to the WeMasterTrade live stream. So now, before we dive into packages, trading rules, and promotional mechanics, we want to take a moment to zoom out and offer you the pictures of who WeMasterTrade really is, what we believe in, and why we build this platform the way we have. Because when you're putting your trust and your trading into a company, understanding its philosophy isn't just helpful, but it's essential. And so this segment is about origin, intention, and impact. So it's about how WeMasterTrade began, what values underpin the form, and how those values translate into real tools and an outcome for trader like you. And to work through that, I'm joined as always by two people who live and breathe this principle, Onus and Helen. So let's start at the beginning.
Thank Ida. To truly understand WeMasterTrade, you need to understand why it created. Unlike many platforms or brokers that evolved from traditional financial institutions, WeMasterTrade were born with a purpose-driven mission to give capable traders access to capital, their background, location, or financial situation. We were founded in 2022 as part of WeMasterTrade Group, headquartered in Vancouver, Canada, while WeMasterTrade built its name on signal sharing, investor and copy trading tech. WeMasterTrade were designed to serve a more focused vision to identify, support, and scale high potential traders, giving them a path to earn professionally without risking their own savings.
And it's important to know, WeMasterTrade is not a broker. That's not just a label. It's a fundamental difference. We don't profit from spread or commissions. Our success is directly tied to the success of our trader. That's why everything we have built, from instant funding packages to our virtual model, is structured with alignment in mind. We take on the capital risk. We give you the roadmap. You bring the skill. But we also know that skill alone isn't enough, which is why one of our funding principle is education first. We don't want the trader to blindly follow rules. We want them to understand the logic behind the structure. That's why we invested heavily into the WeMasterTrade Academy, a training ecosystem built to take you from beginner to consistently funded professional.
And their academy is something special, with courses ranging from introductory trading psychology all the way to advanced risk calibrations and multi-asset strategy design. So the WeMasterTrade Academy isn't just about the theory, it's about implementation. So we have designed a curriculum to match the real-world trading environment within WeMasterTrade. So what you learn, you can apply directly to your trading account. And to ensure that our systems and content meet global standards, WeMasterTrade is proud to hold an ISO 2018 certification, which confirms our educational products and trader development program meet rigorous international criteria for quality, structures, and learning engagement.
That certification is a big deal because it shows our long-term commitment to developing traders. It's not just collecting fees in an industry where many call it platform come and go. WeMasterTrade has positioned itself with real operational stability, compliance framework, and internal accountability. We are not here to follow a season. We're here to help build career.
And we have seen the commitment translate into the real story. If you read just our testimonial page, you will find traders from Nigeria, Vietnam, Canada, the Philippines, South Africa, all talking about how we need to help them not just earn more, but trade with purpose. They talk about the passing challenges after a year of struggling with the retail broker. They talk about finally being able to trade without the emotional burden of risking personal funds. We have had the student become a full-time trader. We had women re-enter the finance world after career break. And we had a young professional from underpenetrated region 5 newly access the market with a funding account. And that's the impact, and that's what drives us.
And it doesn't stop there. The WeMasterTrade ecosystem is designed to grow with you. So for those who want to stay engaged and up to date, we maintain a regularly updated blog section where our team of experts and educators share weekly insight, trading psychology, breakdowns, market reactions, and platform updates. So we believe that learning never ends, and we keep our traders informed. But let's also talk about culture. So what makes WeMasterTrade different isn't just the product offering, it's the community mindset. So we actively promote trader integrity, respect for competitions and knowledge sharing. So whether you're in a Telegram group, watching YouTube series, or engage with us online support, you see that we're actually listening.
And I speak honestly here, in many platforms, the trader is just a customer. At WeMasterTrade, the trader is a product. Your performance drives the business, your voice saves the platform, and your consistency determines how far we can scale together. That mutual accountability is rare, and it's something we're proud of.
And if you ever doubt whether this part is real, whether the trading career is truly within breeze, I encourage you to read the testimonial, take a look at our funding account, and connect with people who go through the system. The story are real, the capital is real, the reasons speak for themselves.
So to summarize, WeMasterTrade is a capital allocator, a talent accelerator, and an education-first trading institution. So we are here to challenge the status quo of trading access, to build a system that reward performance over promotion, and to create real scalable income opportunities for traders around the world, regardless of their starting point. So this is more than a platform, it's a trading movement, and if you're ready to be a part of it, today's live stream will show you everything you need to know. And thank you, Honors and Helen, for that deep and honest work through. So coming up next, we're going to take these foundations and connect it directly to our actual offering. That means we'll also be discussing the different account packages available at WeMasterTrade, how they differ, who they're designed for, and what kind of results you can expect from each. So now that we have explored who WeMasterTrade is and the principles that we stand for, it's time to move into one of the most essential parts of this live stream, an in-depth discussion on our account packages. So this is where it all begins for most traders, choosing the structures that best align with their goal, their style, and their current skill level. And when we say packages, we're not just talking about dollar figures, we're talking about framework. So each packet we WeMasterTrade represent a different pathway toward growth, and today we'll walk you through all of them, what they offer, how they're structured, and most importantly, who they're designed for.
Exactly, Aidan. At WeMasterTrade, we don't believe in a one-size-fits-all model. That's why we build two district products like for trader, the challenge package and instant funding package. Each line includes a variety of account size and configuration because we know that traders come with different trade, risk capacity, and timeline.
And let's begin with the challenge model, a two-phase evaluation system with a trader who wants to prove their skill before being allocated capital. It's structured, fair, and has become the more popular rule for new traders entering the WeMasterTrade ecosystem.
In the challenge model, you begin in a simulated account and your goal is to meet a specific profit target while staying within strict but reasonable risk parameters. There are three stages in total: phase 1, phase 2, and the funded stage.
So think instance for our 10,000 challenge, a great starting point for traders who want to minimize upfront costs while building a track record. So let's break it down phase by phase.
In phase 1, you need to hit an 8% profit target with a 800 without reaching a 5% daily loss or 10% overall loss limit. You have unlimited time to achieve this. That's a key difference from many platforms. We don't pressure you with deadline.
When you pass phase 1, you will move to the phase 2, where your profit target will up to 6%, and that the second rush, the risk will remain the same. And here's some team units. In phase 2, you already start receiving a 30% profit share if you exceed the target.
Finally, once both phases are clear, you enter the funded account when you trade with real capital, have no profit target, and your profit share jump to 90%. That's one of high in the industry.
And this is currently ideal for newer trader or experienced trader who want to start with lower pressure and learn the system. If you still require your strategy or want to get a feel for WeMasterTrade risk framework before scaling, pick the perfect work package to begin with.
So now for those who are considering a strategy and want to start with a larger account size, we offer 25,000, 50,000 and 100,000 challenge packages. So the structure is similar, two phases, the same 5% daily and 10% total loss limit, with the profit target scale proportionally.
For example, in the 50,000 challenge, you will need to hit 4,000 in phase 1 and 3,000 in phase 2. While the targets are higher, the level rate remains the same 1 to 100, giving you room to adjust position sizing.
And the 25,000 to 100,000 challenges are ideal for traders with more capital and management experience, especially those looking to the extremely scale to the larger funding account. If you already touch all of challenges or have a strong verified trading history, this is a good step up.
So every challenge package comes with a one-time fee. For example, just $45 for the 10K challenge. So this fee is refundable when you become funded and meet minimum performance conditions. So what happens if things don't go your way? You're eligible for a 30% reset discount to stock fresh. But what if you don't want to go through a challenge at all, but instead wanted to access real capital immediately and get paid purely on results? So that's where our instant funding packages come into play.
And this is why WeMasterTrade truly set a sell path. Our instant funding model is designed to get experienced, deep-settling trader to the chance to trade real capital from day one. No evaluations, no demo stage, just pure light trading backed by structure, fair and transparent fixed system.
And what makes it even more accessible is that you can choose from several different account types depending on your style, preference, and goal. Today, we're going to walk you through each of 5 main instant funding packages and standard 51010, 510 Euro, 51010 NoBC, and customized. We'll compare in the detail, but more importantly, we'll help you figure out which package is right for you.
So let me help set the scene quickly. So all of our instant funding packages give you live trading access from day one. So that means no challenge phases, no evaluations. You pay once, follow the rules, and you're trading live capital. And every account, no matter the size, includes no time limits, up to 90% profit share, balance-based limit, scale plans over $1 million, and support for EA, swing trade, captain, and even abstract. So now, let's go packages by packages. And as we go, Helen, I want you to jump in with real advice on who should actually choose which one, and what kind of traders you've seen succeed with each.
Let's start with the standard package. I always describe this one as the best friend for traders who just want stability. You're getting up to 200,000 in capital with a very manageable 4% daily loss limit and 6% overall limit.
It's like that scam steady account that doesn't push you to overtrade, and with the profit split up to 90%, there's zero earning chance even if you're taking a slow and steady approach.
So, what about commissions?
Competitive across the board, Forex at $4 per lot, gold at $4 per lot, Index at $1, stock at $0.07 per lot.
And everything is allowed: new trading, scalping, weekend holding, EAs, SFT, you name it.
So for the audience, if you're someone who trades regularly, understand your strategy and wants a full range of assets and plan to play alone the game, this is your sweet spot.
And it's perfect for intermediate to advanced trader who already know their ads and don't want to scrap with the target's May challenge. And if you ever had an account while due to unrealistic rules, you will find the standard model refreshingly fair.
I also say it suits swing trader, and the 4 or 6% risk profile gives enough flexibility to hold multiple day position, especially with weekend holding fully allowed.
Alright, so moving over gear, let's talk about the 5-10-10 package, saying capital ceiling up to 200,000, but now you get 5% daily loss and a wider 10% over limit. So why does it matter?
And that education is massive for traders who scale into position or take a multiple intraday per setup. You got more room to breathe, especially in high volatility markets.
And the profit target here is also 10%, which align well with the risk window. Plus, you still get full support for scalping, EAs, new trading, it's very trader friendly.
And this is bad for day trader, especially though trading a sub like NASDAQ or gold that's move up. If you got attached in your daily strategy and just some risk spreading room, this is your package.
And also for traders who want structure but don't mind having that profit target. The clear milestone motivates some people, especially if they are payout oriented.
So now here a personal favorite, the 5-10-0. You get 5% daily and 10% overloss, but no perfect target, none, zero.
And that blessing for high precision trader, you're no longer chasing a number. You just focus on protecting equity and growing capital slowly and safely.
This one learns by low frequency trader as sniper. If you enter the trade to 5 trades a week at your speed, you're not personally for patient, you actually reward for it.
Veteran swing trader, risk concept trader, people who prioritize consistency over speed. If that's you, you try here.
And let's be honest, not everyone wants to hit targets. Some just want to trade well and scale up cleanly. This is their home.
So now for the root braggers, or rather those who don't want to be evaluated about even the profit data, the 5-10-10 no PC removes profit consistency bracket, right?
Exactly the same for or 10 risk profile, but you do not try to keep your profit growth mode. One winning day is totally fine.
That's it. Trader copier are not allowed in this one, so it's for manual trader only, and you need to trade responsibly. But for aggressive trader who sometimes hit big buy, this is play.
And it's perfect for high-risk reward trader or anyone who had issue with consistency rule at other firms. You trade how you want, just keep it inside the broader box.
And last but not least, the customized package. So this is WeMasterTrade saying, you know what you need, let's build it together.
You can adjust daily loss, overall loss, your liking. Plus, you can fund up to 400,000 more than any other account.
And it's premium, flexible, and comes with all trading style allowed, including EAs, neural trading, weekend holding, SST, and more. And who is for? It's for top-tier professional, as have fund trader, signal provider, high volume trader. Anyone with a very specific structure in mind, this package will let you build it.
I always say if you try other model and nothing quite fits, build your own rules ring with customized. That freedom is rare.
So to sum up, every instant account that we offer comes with clear risk parameters, track commission, deep market access, and real capital potential. So there are no limits and payouts start so early as 1 day in.
And no matter your strategy, scalping, swing, algo, or manual, there are an account that align with you. The key is picking the right one now, so you can start building consistency from the start.
And if you ever ensure our team is available 24/7 to guide you, but the real secret, pick the account that fit you deeply, not your dream. That right people way outperform the biggest promise.
So up next, we'll walk you through how to protect your account, avoid breaches, and understand the key risks and consistency rules that power our entire platform. So let's talk about the part that either makes or breaks your account. That's right, it's time to dig into the trading rules and how to actually stay compliant once you're funded. Because let's be honest, getting funded is exciting, but staying funded, well, that's where the game really begins. And the number one reason traders lose their account, it's come down to one thing, the daily loss limit.
Yes, the dreaded daily loss. It's a one rule trader think they understand until it kicked them out of their account at 3:17 p.m. on a random Tuesdays.
But here's the good news. When you understand how it works, really works, it's become one of the best tools for risk control. So today, let's break it down from top to bottom.
So what is a daily loss limit, also called maximum daily loss?
It's the maximum account of loss you are allowed to incur in both floating and close trade. On any single trading day, if your equity falls below that limit, even for a moment, your account automatically close.
And the key thing here is the daily loss is calculated from the higher of either your balance or your equity at the start of the trading day. That's a really important distinction and is what trips a lot of people.
So let's work through a live example. So imagine at the start, day 5, and your balance is 105,000. Your equity, however, is higher, 107,000, because of open closing profit.
If you're on a 4% daily loss limit, we calculate it up the high number. It's 107,000.
So 4% of 107,000 is around 4,000. That means your equity for the rest of that day can drop below the 102,000 and boom, the account is gone.
So, right, I think it's important to point this out. The system isn't waiting for a close, it's real time. Even if your trade is closing lots and you haven't closed it yet, if your equity dips below the threshold for even a second, well, that's it.
And now let's reverse it. Say at the start of the day 7, your balance is 100,000, but your equity at 99,000 because your open trade are slightly in loss.
Since balance is higher, we pay the 4% on initial balance, so 4,000.
So your equity now must stays about 96,000 throughout the day. If it drops to 95,999, auto liquidations kicks in, no warning, no margin call.
And what happens if you break it? The system will set a market order to close all trades. Everything liquidated. Your account is disabled and you can trade again unless you purchase a new packet.
And here the kicker, the auto close happens when the system detects the red zone will cross it. But due to market fluctuation, your final profit and loss might look worse than the actual result because the system executes the close based on price lifted at time of liquidation.
So even if you only intended to take a 3900 loss, one sleep page spike in gold or NASDAQ and suddenly it's for 200, so that's what we don't say. Don't ride the edge.
Alright, let's talk about how to avoid violating this rule because this is where the pro mindset kicks in.
First tip, know your buffer. Never plan trade to take you right up to the edge of your limit. Leave at least 10 to 50% room below that mark loss, especially in volatile market.
Tip 2. Check your equity, not just your balance. I can stress this in most traders stare at their balance all day, but if you're floating loss in bragging your equity, you're heading toward a violation.
And tip 3 is a dashboard or a tracker. So inside WeMasterTrade, we provide risk dashboard that shows your live flow stats. Use them, check them. Don't rely on your memory.
Also, power trading after a big loss early in the day. If you lost 3% in the first hour of London session, maybe it's time to stop and red flag, not try to revenge trade your way back up.
And another big one, trade smaller during news hour. If you trade gold during the NSP with a full loss side, you are practically begging to break the daily loss rule, get position size and ride pro volatility.
So what are the top broken mistakes you see when it comes to daily loss?
Number 1, over leveraging trader opening position that are 5, 6 or 7% of their account. If they close quickly, but if the trade turn red fast, it's rarely too late.
Number 2, holding overnight without checking exposure. If you hold the trades overnight and wake up to a 60 people, the daily loss will be hit before you even open your eyes.
And the third, assuming that hope trades are all that matter, well they're not. Remember, equities include both floatings and closed positions. The total equity line is your score.
I always say this to new trader, the daily loss rule isn't your enemy, it's your account error. It's designed to protect you from doing something irreversible.
Exactly, it's for discipline. You can be aggressive, but only within the box. And if you learn to the trade inside that world, you will last longer than 90% of the market.
And the last note, this isn't just about rules, it's about trust. So WeMasterTrade funds you because we trust that you manage risk responsibly. So the daily loss is that to protect that trust on both sides. So next up we are going to enter a short break, and after that we're going to continue with the current trading rules here at WeMasterTrade. Welcome back, trader. So in the previous segment, we have covered the daily loss rule, and if you haven't already clicked that one, you're missing out. But now we move from the daily boundary to the absolute boundary. So I'm talking about the maximum loss rule, also known as your account stop loss, the line that can't be crossed, not just for the day, but for the entire life of your account.
And this is where a lot of traders misunderstand how the rule work. I think they think, well, I didn't hit my daily limit, so I'm fine. But then a week later, they chip it away their account, and suddenly liquidation.
And the mark loss rule is the last safety net. If the daily loss is your daily sits well, then the mark loss is your airbag. If that limit is hit, it means the account is deemed unforeseeable under current priorities and explode immediately.
So what exactly is the max loss rule? So let's define it simply. It's the total maximum amount you're allowed to lose across all trade for the entire life of your account. If your equity, that is, dropped below a certain point, real-time capital including open trades ever drop below a certain percentage of your starting balance, your account is gone, period.
And unlike the daily loss, which reset every day, this one doesn't reset. It accumulates. You can lose 2% one day, 3% the next. And if your total loss across the line, that's it.
And the percentage limit depends on your market. Typically either 6% or 10% of your initial balance, not your equity, not your profit, but the original number of your start rate.
So let's work through a concrete example. So suppose you have an instant funding account with an initial balance of $50,000 and your max loss limit is 6%, which is $3,000.
That means your equity can never go below 47,000 ever. Doesn't matter if you make 1,000 yesterday, the total loss from your high point back down to that threshold is what matters.
And remember, this rule includes both close losses and floating losses. And so if you have lost 2,000 in close trade and you have another 1,200 floating in red, your equity is now the 40,800. That's below the limit. Account close.
So just to be clear, it's not just about the net gain or loss to court trades, it's about where your equity stands in real time relative to that stop loss for.
And when you're in profit, here what is interesting and a little tricky. Let's say your account grew to 51,000, convert you in profit.
But the mark loss limit is still based on your original 50,000 starting balance. So if your limit is 6%, the trader is still the 47,000. Now what changes? How much room you have to fall before you hit it?
Exactly, and now you have 4,000 in total buffer because 51 minus 47 is equal 4,000. So profit gives you caution, but the floor never moves.
And so when your equity drops below that maximum loss threshold, even by a few dollars after the liquidation trigger, all trade explode immediately at the market's rise.
And again, like with a daily loss, if the volatility or slippage, your account might close out below that line. That's just execution reality.
And most importantly, once it's breached, that account is permanently disabled, so you need to purchase a new account if you want to continue trading. No resets, no rollbacks.
Alright, let's get tactical. How do you actually trade inside this rule without constantly worrying about it?
First, track your total close losses every day. You should always know how close you are to your mark loss floor. Don't wait the dashboard warning. Calculate it manually.
Second, your profits at protection, not permission. Don't treat floating profit as a green light to entry rate. Instead, consider locking its gain by reducing the loss side when you have.
So if you manage your floating loss aggressively, even if you're positive overall, a single trade with full stop placement can take you from safety to shut down in a few minutes.
4. Stay cool when you close. If you're down 5% out of your 6% limit, that is not the time to double down. That's the time to step away, hold, and retain your entry.
And for the biggest mistake, underestimating floating drawdown to the below 3 loser and think, okay, I still got run, but they forgot about the 4 trade floating minus 1,800.
Second, traders who trade recovery after a bad day, they lose 4% in one day, come back win the next day thinking they make it back and instead take another 2%, boom, violation.
And third, and this one hurts, and ignoring sleep page during major need. So even with a tight stop, newcomers can gaff you straight through your limit.
The mark loss rule there for a reason. It's not there to punish you, there to protect you from yourself. Every successful trader I know see their stop loss, whether personal, institutional, as a non-negotiable boundary.
Alright, it's a reality check. If you're consistently rushing up against your math lot, the problem isn't the rule, developing your system, or your psychology.
So every master trader is not just given capital where it teaches the structure, and the math loss rule is what separates gamblers from professionals. So remember, your math loss is a percentage of your starting balance, typically 6% or 10%. It's calculated using equity, not balance, and it includes both close and floating losses, and once reach, your account is gone. So coming up next, we'll work you through the consistency rules and why steady profit matters more than big spike when it comes to growing, scaling, and getting paid.
And if you ever make the 5,000 in one day, then make 200 the next 40, and wonder why your payout got flat, the next statement is for you.
And let's try into rhythm of profitability and how to stay consistent under the WeMasterTrade model.
So, alright traders, we have talked about the daily loss limit, and we've just covered the maximum loss rule, 2 pillars of protecting your capital. But now it's time to shift gears just a little and not talk about risk, but about results. Because here's the thing, if you're not just about staying alive in the game, at WeMasterTrade, we want to see trader grow, scale, and can actually earn. And to do that, you need to do more than just a winning day. You need something called profit consistency.
This rule right here, the profit consistency rule, is what separates lucky spy from the reliable trader. It tells us whether you can make money over time, and if you just hoping to hit one big winner and roll the dice.
And more importantly, it's also how we relate every trader eligible for withdrawal, profit sharing, and even scale up. So if you're fun and you're wondering why your payout didn't go through, this rule could be the reason.
So let's define it clearly. The profit consistency ratio is a measure of how even your profits are from day to day. The more balanced your profit, the lower your ratio. The less consistent, meaning you have one giant profit day and then smaller or losing day, the higher your ratio.
The idea is simple. If 80% of your total profit come from one day, that's not consistency, that look or risk. What we want to see trader who make profit day after day, even if it's small, that's what we can scale.
And how it is calculated, the formula is really straightforward. Take your bad trading day profits and divide it by your overall profit. Since you start with the account, then multiply by 100.
So So the best day divided by your total profit multiply 100 equal your profit consistency.
And just to be clear, best day referred to your high close profit in a single calendar day, and total profit is a sum of all your close profits minus any close losses and open losses across the life of account.
And let's say you had the following results over 5 trading days. Day 1, the 100, day 2, 200, day 3, minus 50, of day 4, 100, day 5, 60.
That means your total net profit across 5 days is 100 plus 200 minus 15 plus 100 plus 16 equal to 410.
So your best day was day 2, that's $200 in profit.
And so now we apply the formula at 200 divided 410 equal to 0.4878 multiply that by 100 and you get profit consistency ratio at 48.78%.
Now, let's say your account requires 20% profit consistency with e-commerce. With this trader is way above that, so they wouldn't qualify for a payout yet.
So even though this trader is profitable, they're not consistent enough, so they had one big day that made up half of their total profit, and that's not sustainable, and that's what we're looking at here.
And this is where I really want to speak to traders. If you're relying on one or two big ones to carry on your entry account, that's not professional trading. That volatility, you can get lucky, but you're going to stay funded.
And remember, it's not just about your payout this week. WeMasterTrade evaluate your consistency over time. Trader who show long-term balance are the one who gets power, who gets fear, who gets trust with more capital.
So let's address the number. What an acceptable consistent profit consistency ratio?
Typically, the rule is set at 20%. Doesn't mean your bad day should not exceed 20% of your overall profit. And let's say you over limit, don't panic. You're not disqualified. You just need to keep trading even out the curve.
Here, how to do that. Trade smaller size for a few days. Take smaller control wins for 200 or 300 days. Avoid big swing trade that could spike your ratio again. Spread profit across multiple days, not one month setup.
And for those who are using EA, monitor your equity curve, if your EA is growing profitably into one day, you might need to rebalance it. The market might be profitable, but it won't pass it through unless it's configured with payout logic in mind.
And for the common mistake to avoid, mistake 1, trader hitting target early and taking the rest of the week off. That's inflate your bad day and leave the rest of your curve up.
Mistake 2, overtrading after a big day, thinking I'm safe now, and trying to squeeze in more instead of averaging out that high ratio.
And mistake number 3, thinking this rule is just a hurdle. No, it's not. It's a reflection of what we actually look for our master traders.
And at the end of the day, this isn't about controlling you. It's about building habits that can handle scale. If you can be consistent with 25,000, what happens when we give you 100,000 or more?
Exactly, consistency is what makes you safe to invest in. As WeMasterTrade, we're fund trader, and we also study them to tell us whether you're serious about long-term trading.
So we've seen it in time and time again. The traders who respect this rule, so they are the one who gets multiple payouts, referrals, and grow into six-figure funny account.
And so don't fear this rule, understand it. Use it as a feedback tool. If your ratio too high, great. Doesn't mean you or your gut profits. Now keep going, balance this out.
And remember, you don't need to calculate it manually. WeMasterTrade dashboard calculate your profit consistency ratio automatically. You can check it anytime under static tab.
So to recap, this rule is about balance, not volume. So aim to keep your best of your total profit, spread your wins across multiple sessions, and monitor your progress in the dashboard. So we work through the daily limit, tackle the maximum account loss, and examine how profit consistency shape your long-term payout and growth. And now we arrive at the final and perhaps the most overlooked rule of all, the risk consistency rules, or what we call the discipline test.
That's right. Traders often think the biggest enemy is the market, but truthfully, it's inconsistent, especially in how much you can risk from one trade to the next.
This rule doesn't look at how often you win, it looks at how stable your risk is and how professionally you're managing your position sizing. If you're sure about scaling out WeMasterTrade, this rule is non-negotiable.
So let's break it down. At its core, the risk consistency rule is quite simple. You're not allowed to risk more than 2% of your initial balance on any single trade idea.
And that includes all losses associated with that trade idea, both close losses and floating losses. Even fee, commission, and swap are counted.
And for some account like the 510 NoBC package, the rule is even stricter. There the limit is 1% per trade idea, not 2%.
So because consistency isn't just about the outcome, it's about the process. The more erratic your position sizing is, the more volatile your equity cost becomes, and that what makes you hard to scale.
This rule protects both you and the firm. It helps reverse capital, prevent large equity swing, and make sure your egg plays out over time.
Typically at your account headless, if your position size pulls up and down, as you report 5 loss one day, 5 loss the next, the system flattens. That's not structure, that's cover.
So this is where it gets technical, but stay with that. But the term trade idea isn't just one order, it's a group of trades that share the same logic.
And if you open 3 buy position on go at different time, that's one trade idea.
Because it's the same symbol, same direction, and can go around the same time. Even if you open them at different time, you send at a single and 5 position from the risk capacity.
So the system doesn't look at your trades in isolation. It groups them into logical bundles and apply the 2% rules across the entire bundle.
You can have multiple separate trade ideas as long as each one respects the risk limit.
And for example, if you go long on gold, short on the GDP, JPY, and short on AUD USD, and each position had its own distinct direction and a side, there are 3 separate trade ideas, and each one can reach up to 2%.
So let's say you go on buy gold and then you go buy again and again. So now you have 3 open positions in the same directions on the same assets.
Yeah, so the system trades that as one trade idea. So if the combined floating risk or eventual loss from the position is at 2% of your starting balance, and boom, you got broken through.
And another mistake, opening multiple gold buy, then closing one 10 minutes later, and 2 orders together. The system still group trade close within 3 minutes of each order. So be mindful of your close timing.
So let's go hands-on. Suppose you have a 100,000 account. The 2% max risk per trade ID means you can't lose more than 2,000 in any single trade total.
So you open 2 gold by 1 loss each. You don't play a stop loss, news hit, market drop 100 pips, It's lost at 1,000, that to 2,000 total.
You're right on the line. If sleeper or swap at the few extra dollar, that's it. Road broken, account flag or liquidated, depending on enforcement model.
And on-term account, especially in-symphony account with stricter withdrawal, this breach may result in loss of funded data or immediate closure.
And here's some broad tips to stay rate consistent. Tip 1. Set your lot size based on account risk, not emotion. Know how many pips equal 2%.
Tip 2. Use stop loss order religiously. Set them based on risk per trade idea, not random check level.
And tip 3, don't stack trades without calculating combined risk. Just because one position is below 2% doesn't mean 3 of them are.
Tip 4. Label your trade idea mentally. If you're entering on the same setup, just add it as one side, it accordingly.
Tip 5. If you want to split an idea into multiple entries, do it smart. Scale it smaller. You micro loss if needed. Keep the total exposure below 2%.
The common reason traders break the rule, stacking multiple in try as one trade idea thinking is still separate.
Second, opening high-risk trader after win, assuming they playing with how many spoiler, the market doesn't care.
Third, neglecting floating loss. A trade may not be closed, but the floating threat still count toward the 2% risk.
This is a chart policy. This is professional practice. Hedge fund allow it, bank follow it, and real capable, real trader follow this.
Exactly, we're not here to micromanage you. We're here to protect your account, our capital, and integrity of this community.
So traders who internalize this trade will understand that small, consistent risk is the foundations of scalable capital. Those are the ones we grow, and those are the traders who go from 25,000 to $1 million account. So next up is the news analysis of today's calendar.
Okay, so wait a minute. Cho mình điện thoại đi, mẹ đi. Điện thoại của bà. Okay, we start with the first event. For the federal fund rate at 1 a.m. Actual at 4.5%, forecasted 4.5%, period and with 4.5. No chance this will impacted the real market mover, not really a rate itself, but the tone of the FOMC statement. The market impact neutral reaction unrealistic, but trader immediately looked fast forward the guidance. The next event, the FOMC statement, inflation persistent tied to the PCA data, labor market strength tied to the unemployment claim and cost index. Policy outlook are future high cut. If however inflation concern USD strengthens, equity may fall. If slower growth concern, USD weakens stock rally. The next event, the FOMC press conference at 1:30 a.m. The most important USD event today, fractional watching can revert the initial reaction from the statement. Trader focus on the higher for the longer bullish USD, close to cuts bearish USD. The President Trump speak at 3 a.m. Medium impact of political command with the trade wars, tariffs, and fiscal spending could strike market. Unpredictable, but USD often strike with the unexpected remark. For the core PCE price index, month over month at 7:30 p.m. Fast reference inflation measure higher than the forecast. Shows strictly inflation justify keeping rate hikes will lead USD. The negative event is employment cost index. Slightly shorter labor cost growth, such as worse pressure equaling reduced inflation rate, mildly barred USD, but overshadowed by strong PCE. Employee claim a bit higher than it targets weaker labor conditions, barriers USD, but not major deviation. For the USD summary, mixed data, but the core PC is run on fast harvestness our labor indicator. USD bullish buyers expect volatility during FOMC. The negative indicators retail sale for AUD. Strong consumer spending signal how the domestic demand. This reinforces expectation that the RBA may stay hawkish, impacts strongly bullish AUD, especially with weaker CNY and CAD. That's all the news for today.
So thank you, Helen, for that deep walkthrough. So thank you all to our audience for joining us today. So we hope that this session has been informative and you're as excited about the opportunities at WeMasterTrade as we are. So remember to like, subscribe, and share the live stream with others who might benefit from it. And don't forget to follow us on our social media platforms for more updates, promotions, and training tips. Stay tuned for our upcoming events, and we look forward to seeing you again soon. Until next time, happy trading.